Good evening, everybody. It's Mark Boardman. It is Thursday, the 23rd of August. It's now approaching 9:45 in the evening in the UK. You're looking here at the New Zealand dollar versus US dollar trade that I took in the trading room today, just before the trading room started, actually. So this was on live during the trading room. Entered here. Exited around about here. You'll see why shortly, because I have a system called set and forget whenever I want to leave the house and just leave a trade to run its own time. Um, um, and that would still be a trade that I'd still be in right now had I not used set and forget. So I was out round about here on set and forget, and obviously the market's continued south. You'll notice with this FX trend catcher system, it's all about getting reversals and the beginnings of new trends. And this volume price analysis software that I use is the only software I'm aware of that has the ability to do it reliably. And basically that's because it uses volume here, volume price analysis, which is taking tick data from your broker and telling us whether there are net buyers or net sellers in the market. You've got something called a heat map as well, and these red trend dots here. When you've got all three lining up, that's when the software is telling you that there is a valid breakout to a new downtrend. Okay, so that's pretty much how it works. That was one trade that I was doing this morning. Another one I did right towards the end of the room was the euro yen. We've got a pretty straightforward strong signal that the yen here had gone as far as it could go and was going to turn. And this is what the FX trend catcher is all about: catching new trends, new reversals, new breakouts. And that was a trend there. That was on a 1 minute chart. So you've got the New Zealand dollar here versus the US dollar was a 15 minute there. The one we just looked at was 1 minute. We also had the euro versus the New Zealand dollar here. It's another trend that I would still be in, but I used set and forget on that, which meant that I left with profit after it hit a certain target point. So there was 3 trades. And the other one is the Australian dollar versus the US dollar, which I'm actually still in here, as you can see. So entered here. This was the signal on this bar to get into the market. Got in here bit after the hour, just a bit after the hour, but came in and we're still in. So that's running as I speak to you now. Okay, I'd forgotten to mention yesterday there was a couple of trades that broke even. One was the euro versus the pound here, where I've written the word here. Now this star here is a no progress indicator. This was getting on later on, and I made a decision to use the no progress indicator because I didn't want to trade anymore for the rest of the day. Now, for example, if we go back to that Australian dollar versus US dollar, can you see the no progress star here? If this market, which is down here, was up there and I'd had enough for the day, then that's when I use the no progress indicator and I'll get out. If that had been earlier in the morning and I was going to be coming back to the laptop, during the course of the day, then I wouldn't use that. So what I tend to do is use the no progress indicator rather than leave a trade overnight. That's only if the market hasn't moved very much from my entry point. That's not the case with this one here. This has moved quite a bit, so I'm going to leave that overnight and use set and forget. As you'll see here, this is a track record of all the trades that I've placed this week, and I've got a column here for overnight, and this is going to be the first one where I'm going to put yes. Okay, and then I'll record tomorrow the time that comes out. That'll either continue to go on, or the set and forget here will take care of it, where the profit target will be hit, or indeed I'll be stopped out. Okay, so that's that. So far, these are the trades we've had this week. We've got the following strategies: the stalk strategy, which is where you just watch the trade until it finishes, or we've got set and forget, which is the S and F here. Okay, and these are the trades I've taken in the trading rooms this week. So as we speak, we've got a 20 pip, a 21 profit, a minus 22, that's a loss, a 20 profit, a 17 profit, a 36 profit, and these little ones here at 3s and 2s I don't really count. They're not significant. I mean, strictly speaking, we've got 2 3s and a minus 2, because you could say that's two 2 profitable trades and a loss, but 3 or less aren't really worth counting. 20 and 21, that's 1, 2, 3, 4, 5 decent profit trades and 1 loss so far this week. Net profit 96. Obviously we've got to account for this one here, which is the Aussie US. That might come in a loss or a profit. We've got to wait and see, and then we've got tomorrow morning's trades, which is Friday, to place here. Alright, and I don't do much trading on Mondays, and I don't do a trading room Monday either, so I'm just going to keep a track record of the trades I do in the trading room. Why? Because everyone can see those, so everyone who's been in my rooms knows that these are the trades that I was talking about. Okay, so I'll have a written track record and a video track record, which is what you're watching now, of every trading room. Okay, if you're wondering how we got these signals here, then that's something called a fat man that we use. If you can look here, we've got the US dollar at the bottom, curling over, and at the time we had the Australian dollar heading south. That's what gave me the signal to look at the Australian dollar versus the US dollar. What you'll notice about currencies is that they cannot rise or fall too much on any time frame basis. The reason for that is that there are $2 trillion of Forex trades placed on a daily basis. That's 10 times more than all the stocks traded around the globe every day. Those $2 trillion controlled in the main by 10 huge banks, and they're all trying to set exchange rates. Governments are talking to these banks. Exchange rates are very precious to governments. Why? Because they affect the prices of imports and exports, which affects inflation, it affects the economy, it has a huge impact on business. So the banks are constantly in a battle really with each other over what the exchange rate should be. And it's the banks that set the rates. There's no central exchange. So this is why you find with currencies that they are never in an ascendancy to the upside or the downside for very long before they have to snap back, and you'll notice that they always seem to snap back from the top and the bottom, and these are the reversals that we're looking for. And this is why I call it the FX trend catcher, because when you get a reversal, you're the first one in on this new downtrend, okay, or a new uptrend. So in this case we had the Australian dollar coming down, but the US dollar, so really the signal here is anything versus the one at the bottom, and because we had the US dollar that was showing, it had gone too far down, we really just had to look at anything coming the other way. And of the 3 coming down, which is the New Zealand dollar, the Australian dollar and the pound here, which is the orange line, the Australian dollar gave the first signal, and that's basically what happened on that chart there. Can you see? There's the Australian dollar versus the US dollar. The US dollar cannot be weak for much longer. It has to turn because it's at the bottom of that indicator. Sure enough, it always turns, and that's when you wait for your red trend dot, your heat map and your volume to enter the trade, and that's it, off you go. If you're looking for a 15-minute trade, you look at the 1 hour fat man. You always look at the fat man that's one time frame higher than the time frame you're trading in, because you're looking to get inside the trade, you're looking to get in early, catch it. That's why I call it the trend catcher, FX trend catcher. Here you can see the New Zealand dollar versus the US dollar at the bottom. New Zealand dollar dark blue curling over, US dollar light blue curling up. That's where I got a 15-minute trade here. That's the one we discussed at the start of this video. As I was saying, I mean, that one I got out, let's just have a quick look. I got out there at 81.42, okay, for 20 pips profit on set and forget. We're now down at 81.25, so that would have been another 17 pips on top of the 20 pips profit. But that's my decision, if I decide I'm going to leave the laptop for a while on these shorter time frame trades such as 15 minutes, that's when I'll use set and forget, leave the laptop and let the software do the rest for me. So that's where we got that one from. The euro versus the New Zealand dollar was the same thing, really, off the same fat man chart here. The Kiwi was coming down. We had the euro heading north as well, so that was a trade I took, as well as against the US dollar. And the euro yen trade, I showed you the 1 minute scalp here at the very beginning. That came from the 5 minute chart here, and as we can see, this was the euro yen at the far left here at that point in time. Well overextended. It can never stay up there very long, and it come crashing down, and at that point the euro was rising dramatically. So that was a very simple scalping trade there, which got us quite a few pips. And those were the trades for today, folks. Now, if you have missed any of the trading rooms, or you want to find out more about how I get these signals, enter and exit with a profit, then all you need to do is register at my website here, hawkeyemt4.com. Put your email there, first name, last name. You'll then go on my list and you'll get invites with registrations for the rooms I do each week. Next week it's Wednesday and Thursday for the afternoon one. When I say afternoon, I mean UK 2 p.m. That's 9 a.m. New York. And then there's a Friday, either 9 a.m. or 10 a.m. every Friday morning. Again, you register separately for that. By the way, if you do go to my website, my book here called the 3-Step Forex Trading System isn't ready yet. Okay, this is a website in development. We're going to take one step at a time. That book will be ready in the next week or so. So if you do try and download it, it won't be there. But what does work is this form here. So if you fill this in, you'll get on my list and I'll be able to inform you. So far this week, 96 pips of profit. Which is quite healthy, with another trading day to go there. So thanks for listening, and I'll hopefully see you in the trading room tomorrow.